this is a follow-on video on dividend investing. How are dividend stocks faring at the end of 2020? So if you are a dividend investor or you want to know more how you can maximize dividend investing, then you have to check this video out. Hey guys, so in this video, we're gonna do a deep dive once again on dividend investing. Over the past few months, we did a ranking of stocks that had good dividends. That was around August 2020. The thing about that is this. Over the past few months, a lot of those stocks have gone up already. Over the past few months, we've seen their stock prices push higher. What does that mean and how does that impact you as a dividend investor? But before I do a deep dive on that particular topic and show you those stocks, I want to drill in on this. If you're new to this and you have not heard about dividend investing, I'll put the link down below on how you can buy stocks with dividends and how amazing it is. But just as a primer, please do note this. If you are an investor and all you want is to get cash flow for life, all you want to get is passive income for life, dividend investing is amazing. Why? Because as long as the company is making money, and as long as their dividends are consistent, as long as their dividends are good, and as long as their dividends is something that they can sustain over a stretched period of time, you will get cash flow, you will get passive income, even though you are holding the stock. So think about it this way. When you are buying a stock that gives you dividends, you are compensated while waiting. You are compensated without doing anything. So if you are a business person, you are an entrepreneur, you are a person who's busy being a lawyer, a doctor, an accountant, an engineer, an OFW, dividend investing will work for you because you do not have to watch the market all day, every day. You don't have to watch and monitor the market every minute. Why? Because you can just buy stocks with amazingly, massively good dividends. And dividend investing is the game. And I'll say this over and over. When I was younger, I did not like dividend investing. But the older I got, I knew that I needed to pocket some of those growth stocks, some of those earnings, and transfer them into stocks that would give me cash flow and passive income for life. So as I give you an update in a bit, please do note a couple of things. Number one, we are in the midst of a recession. We are in the midst of a pandemic. What does that mean? There are some companies that have really been affected, that by the time this video is made, patapos na yung taon, two things have happened. Number one, they did not give out dividends for the year, which aggressively destroys the dividend earnings that you would get. And number two, some of them may have given dividends still, but it's at a lower rate than what it was in the previous years. So, but there are some also that have maintained it. So that's what we're gonna take a deep dive on. And the next thing I'd like to talk about is this also. Remember the whole context of dividend yield. Dividend yield basically is the higher the stock price that you are buying the stock from, your yields will be lower. And I want to also show you that, if you bought right now, would the yields be still attractive? I want to show you also that if you bought 2020, will it still be something that's worth it? Please do note that November 2020 na, majority of those stocks have given out dividends. So why am I saying this? Maybe the context of you buying stocks right now should be on the basis already of what the dividends would be for next year. So let's just check it out. No, at the current prices, is the dividend yield still attractive if you buy it right now and you're looking at next year? So please remember, I know that there are some stocks that are still giving out dividends end of November, and that some will give it this December. However, that's not the broad majority already. So I want to revisit the 12 stocks that we've listed out, the ones that we think have done so well, and then let's see also, assuming that they maintain the same amount of dividends, given the current stock price, will the yields still be attractive for you? Because here's the thing, at the end of the day, it's all about investing and it's all about getting the yields that you want. If the yields are not so attractive for you, no matter how good dividend investing is, it may be good to wait. Wait for what? Wait for a possible correction. Wait for a possible retracement. Wait for, okay, I like this company. I like the dividends that it gives. It's consistent. However, it's not the yield that I want. You have to remember, if you are into dividend investing, the name of the game is to buy the dividends, or at least buy the companies that the dividend yield would make sense to all of you. So again, the prevailing teams, umakyat na yung stock. Some of them have slashed their dividend yields. Some of them may be affected yung business that next year they might not be giving good dividends for you. Here we go. Let's take a deep dive. If you guys are ready to take a deep dive, comment below. Deep dive.
Hey guys, so this is the deep dive on the dividend stocks. So what I did was I segregated it into two tranches. The first tranche are the ones that relatively they still have good dividend yields. However, similar to what I discussed last August, they have special dividends, which because of what's happening right now, because of what's happening in the economy, because of the lockdowns, because of the pandemic, there's a chance also that next year the earnings of the company may not be as good. Given that they may not be as good, there's a chance that, hey, if it's not as good, the dividends may be affected. Or even though they don't have special dividends, there might be a shot lang that the earnings might be diminished for the year, and it may carry over to next year, and it may carry over and spill over to their ability of giving out higher dividends. So they may be priced higher today, and there's a chance also that it may be replicated next year. But I'm saying that there might be a shot lang that even if it doesn't get replicated, the yields will still be higher, but not as good as what we have for 2020. So this is the progression, and this column you will see the stock price, and all of this, by the way, is based on the November 19, 2020 closing price. Please do note, if you're watching this at any time in the future post November 19, 2020, it's if you want to buy the stock, you have to compute for the stock price of the day that you are buying it. So if you're buying it December 4, 2020, the main computation will basically be based on what is the closing price, or what is the stock price that I'm buying it divided by the dividend yield. And again, I'm making an assumption that what if it stays the same? This is the possible yield that you could get. Again, the variable in all of this is magkano yung bibigay nila next year, but at least to have a benchmark, we can see what the dividends are for this year, and then we can make an estimation, or we can make a simulation that if they replicate it, kahit hindi na nila itaas, this is the possible yield that you can get. Then siguro you can make iterations on your own, that what if bumaba yung yield to around, say, 20% lower than what it was for this year, this is the yield that you could possibly get. So okay, for number 13, it's LTG. What I would like to point out to all of you is the stock price of this has gone up already from where it was from the last time we presented this last August. Last August, I think it was 8 pesos per share, and the reason why it's in this tranche is because of the special dividends that it gave out from last year, or gave out this year. But even though it gave out special dividends, the yields, is still relatively good, because the yields is at 5.08%, which again, it beats a lot of those relatively safe bonds that we have. So I want to make a simulation now. What if it goes lower? What if the dividends that they're giving, or at least they remove the special dividends? So please do note that the special dividends is at 0.23 and 0.28. So what if I remove them? Matitira na lang yung 0.15. Let's just make a simulation kung magkano yung magiging yield given the price. So if they don't give out special dividends at the current price of 13 pesos per share, your yield would drop to 1.15%. So again, this is just a simulation. I'm just showing you that if you buy it at 13 pesos and they don't give special dividends next year, or it won't be around 0.66, your yield would drop to 1.15%. But if they're able still to give you 0.66, then your yield is at 5.08. Comment below if you're learning. Comment if this is something that's helping you. Number 12, CLI. I was not able to include this on the video last August, but their dividends for 2020, it increased still. Last year it was only 0.20 pesos or 20 centavos. Now it's 0.25 centavos already. Given the stock price of 4.74, it's respectable at 5.27%. So let's just assume also that similar to the iteration that I did for LTG, that what if it goes back to the 2019 rate? What if it drops to 0.20? What will your yield be? So the answer to that is 4.22%. So if they drop their dividend yield to 0.2 4.25, your yield would be 4.22%. So again, you can create your own benchmark. Relatively, no, if you compare the dividends that we have here versus the dividends in other markets or in the States, mas mataas pa rin yung dividends na nakukuha natin dito. But again, 4.22 is okay. But again, if you compare it even to LTG, for example, if LTG does not remove its special dividends, it would be better still. So anyways, let's continue. Number 11 is FLI. FLI stock price also has gone up. And again, similar to LTG, meron din siyang special dividend. And that's why even if you buy it at 1.02, the yield is at 6.35%. Please do note also, comparing this to the August price or to the August yield and price, the prices have gone up already, and also the yield, because of that, the yields have gone down. So for example, I just want to make an iteration that we remove the 0.0259 special dividend, and then we remove the other special dividend at 0.65. Let's see how will it look. Removing that, the yield drops to 3.18%. Not super low compared to the other stocks. So please remember, I'm just showing you 13 excluding the preferred shares. But if you look at the other conglomerates, you look at the other property stocks, some of them, the dividends that they're giving is even below 1%. So it's still quite decent. It beats all of the other conglomerates, or at least other property stocks that are there. NIKL Asia, similar, same fashion. It gave out special dividends at 4.19 pesos per share at a dividend of 0.30 pesos. The dividend yield is still high at 7.16. So if you remove the special dividends, bagsak siya to 1.91%. So again, these stocks are in this category. Mataas yung yield nila even though umakyat na rin yung prices nila, primarily because they gave out special dividends. So well and good if next year the special dividends are given back again. But if they're not given, then you could expect a lower yield from if you would buy it from November 19, 2020. Pwede rin pala may special dividend next year, but pwedeng lower should there be any impact on their earnings. Number 9, DMC, and this one, this has gone up. The stock price has gone up quite noticeably already from August. I think from August, below 4 pesos pa siya per share. So if you just take it at 4 pesos, no, umakyat na siya at the very least, 30% already. DMC has given out respectable dividends over the past few years, but please do note its income for 2020 has declined. And please do note also that the amount of dividends that they give is predicated on the amount of earnings that they would get. But at 5.38%, should they give a 0.48 peso dividend or 48 centavos na dividend, the yield is attractive at 8.92%. Lalo na doon sa mga tao bumili below 4 pesos, your dividend yield would be even more attractive. So I repeat, DMC, the risk is because natamaan yung income nila. There's a possibility that the yields would be lower, but should they give the same dividend next year, your yield is at 8.92%. Number 8, SCC, similar to DMC. Please remember that one of the biggest contributors also to the earnings of DMC is SCC, and one of the reasons why the income also of DMC is down is because SCC is also down. But similar to DMC, historically, SCC has given out respectable, decent dividends through the years. SCC stock price also has gone up. The dividend price, the dividend that they're giving is at 1.25 pesos per share. SCC stock price 11.44 as of November 19, 2020. Should it be kept for next year, the yield is amazing at 10.93%. So interesting though, but as much as it looks interesting, I don't know if this is something that they can do for next year. But allow me to update you and keep you posted on how I see this progress. The next one, 765321, similar to the discussions that we had on the previous video last August. These are the ones that I believe either they're connected to utilities, either they're connected to telco, either they historically have given out good dividends. That's why I believe there's a chance that what they're giving out is something that may be replicated. There's a chance that kung ano binigay nila ngayon, pwede nilang ibigay next year, or because some of them are benefiting out of the new economy, the dividend yield for next year might be even higher, given you buying it at November 19, 2020. Now, first one is AP. Stock price 26.85. The dividend is 1.18. Your yield is 4.39%. As you notice it's lower than 8, 9, 10, 11, 12, 13. But because energy siya, there's a larger chance that what they gave out, even though apektado din naman sila, there's a bigger shot that they can replicate that for 2021. So AP 26.85, 4.39% dividend yield. Number 6, AREIT, 1.18 pesos per share na dividend. I'm just making an assumption that what they gave out for 2020, they will also give out for 2021. But I think there's a chance that they could give out more because of their recent purchases also. Please do note that they purchased the property in Cebu, which will also give them revenue. Then they also purchased a property in Ortigas, which will also give them revenue. So please do note also that AREIT, the stock price has gone up. Please do note that at the time when they did the IPO, the stock went down. So if for those who purchased it when it went down, purchasing prices, the yields for you guys will be higher as well. But since it has gone up, November 19, 2020, 26.55, assuming that it's 1.18, you get a 4.44% return still. A lot of people are asking, talaga, AREIT, how can their dividend be secure? Please watch the video that I made, lalabas siya dito, about AREIT, that their tenants are locked in for a long period of time, and then their occupancy rate is very, very high. Please do note, BPO play and the BPOs have been not affected as much in the wake of the lockdowns that we had a couple of months ago. Number 5 is Globe. What's so interesting about Globe, for those who followed our stocks by request sessions, is that I've been mentioning that Globe has been moving sideways. It really hasn't gone anywhere over the past months, meaning for those who love dividends, of course, the stock going lower gives you a chance to buy it cheaper, increasing your yield, but it really hasn't moved up as much. So the dividend yield for 2020 is around 107.99, or you could peg it at 108 pesos per share already. And I think because although their income right now is relatively, from the past disclosures, not as rosy compared to PLDT, there's a shot that I think if they do it well, the dividends still moving forward in the next few years would be better. As you all know, Globe is pretty much connected to the new normal, to the internet, to e-commerce. Everything that we need right now uses the internet, and Globe is pretty much part of it. So even though Globe stock price has not really dropped massively, its yield at 5.38% is still good, passive, and though it's not as good as what you could get for DMC, SCC, I think compared to SCC, DMC, NIKL, FLI, CLI, LTG, this one, it's somehow, I think it's more predictable than the first batches of stocks that I mentioned. So at 2006, your dividend yield is at 5.38%. Number 4, another telco stock, PLDT, 1,370. Again, when we saw the markets drop last March, the stock price was below 1,000 pesos per share. But even though it has gone up already 30+% or closing 40+% from the stock price hitting below 1,000, the revenues this year have been amazing. A lot of people have been switching, or at least getting broadband, because as you all know, everyone's staying at home, everyone needs fast internet, and PLDT positioned itself properly to be able to reap the benefits of that. So given its current prices, Globe right now is at 5.38%, PLDT is at 5.62%, assuming that they maintain the same dividends. But as PLDT has been earning more, I believe also, similar to what I've mentioned to Globe, there's a chance at some point in the future, as we continue to see a shift towards digital, that I really believe that the incomes of this would continue to grow, and thus increasing the dividends. But at this current point in time, the dividend yield is at 5.62%. By the way, guys, I'll say this over and over, that no matter how much we discuss this, please do not buy, sell, hold, or avoid the stock just because we're talking about this in YouTube. You must create your own framework of research. You must study your own stocks, and you must create you buying a stock based on your own analysis. That's so important. Never, ever, ever buy a stock just because it's discussed in YouTube. You have to do your own research. So number 3, Meralco, 300 pesos per share. The dividend is 15 pesos. The yield is at 5.03%. So Meralco, PLDT, and Globe relatively close to each other in terms of dividend yield. Meralco, as you all know, also is pretty much a defensive stock, energy stock, kailangan siya ng tao. Number 2, GMA7, 5.32%. Stock price is 5.64. What's so interesting about that is there was a point this year when ABS shut down. Boom, the stock price of GMA went up, but after that, a few days after, it just went down altogether. So the dividend is at 0.30. I've seen years where the dividends would have been higher, but GMA7 is the one that will directly benefit from the closure of ABS-CBN. But I'll say this over and over, I really believe traditional media will take a hit because the attention is also shifting to digital means as well. It's also interesting that in the next few years, we're going to have an election. 2021 na next year. Election is 2022. And if you know it also, hindi lang minsan 2022 naglalagay ng ads 2021 months before the election would begin. You see people trying to position. I don't know the legalities of it. I'm not an expert on the election, but what I do know is as more and more candidates try to make awareness or create awareness of themselves, it somehow will boost ad-related revenue, election spending-related revenue for them. So GMA7 still, as of this point in time, at 5.64 pesos per share. Decent dividends. Lastly, SPC. This has been super consistent. SPC gives out dividends every December. So I haven't seen yet their disclosure for the year, but this is based on its dividends from 2019. So the 1.1 peso disclosure is assuming that they would give out the 0.7 dividend that they similar to what they did in 2019. That being said, at a stock price of 10.28, assuming that they will give a 0.7 peso dividend also at the latter part of this year, then at 10.28 pesos per share, the dividend yield for SPC is 10.70%, which is high, which is good, which is very, 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 very respectable. So 10.28 pesos per share, 10.70% dividend yield.
So as you can notice, the sectors and the stocks that are heavily affected, their dividends have been slashed, or it's not attractive for next year. And also, stocks that have been battered down or are still battered down as of now, they may have relatively attractive dividends as compared to when the stock prices were higher. But the ones that were so attractive before, but their stock prices have gone up, you'll notice also that, hey, their dividend yields are not so good. And what's so interesting about that, in this era, the BSP just dropped interest rates again. Interest rates now are around 1%, meaning if you get 4%, you get 5%. That's a better rate of return than what you are getting in bonds. It's a better rate of return that you are getting in other fixed income instruments. So there, to sum everything up, this is how I will put it. Dividend investing is still amazing. However, some of the stocks that have given us good dividends, their stock prices have gone up so much or have gone up a bit, especially when foreigners started to buy. What do I mean by that? For those whose dividend yields don't make sense for you, you can put them in your watch list, but maybe don't buy them yet. Wait for a correction to happen, and when the dividend yield makes sense already for you, when the dividend yield becomes higher because the stocks have either corrected, that's when you pounce on it. But if you find some stocks today, based on what I showed you, now the dividend yield is already attractive for you, you're okay with that, you can live with that, the return is already good for you, then by all means, you go for it. Because at the end of the day, earning in the market is dependent on the yields that you want, the yields that affect you, the yields that are relevant to you and are important to you. So, for example, we've seen AREIT go up when it dropped after the IPO. We've also seen PLDT move massively up. But as you start to compute it, hey, the dividend yield still makes sense for me, then you go for it. That's what I'm trying to say. It does not matter if it has gone up, but if the yield is already okay for you and you think it's better than what you can get from bonds or time deposits, and you are not really the type of person that's really into capital appreciation, then you go for it. But if it's not something that works for you, then just wait. Patience is still the game, and no matter if you're passive in the market, you have to remember this, those that wait will always be rewarded. Those that follow their plan, follow their rules, will always be rewarded. So if your target is, I want to get at least 5% of my dividends, then by all means, you only buy the ones na pasok dun sa 5% na yun. If your rule is 6%, 7%, 8%, regardless of what it is, you only buy the ones that get hit. So if there are no stocks that fit that, then you don't have to go for it as well. I love dividends. It's still passive income, but it always has to go back to are the gains enough for me? The gains that I will get via passive investing, via dividends, is it something that fits my rules? Because if it fits your rules, then go for it. I'm gonna make more videos about dividends, but put it in the comment section, guys, if you have questions, so that I can make more videos off of it. Put it in the comment section if you want a deeper dive on dividends as well. And if you want to say anything, just feel free to put it in the comment section. If you have any personal questions, feel free to slide a DM via my Instagram account. I'll put the link in the description, and you can support us via Patreon and via our YouTube community. If you want to know more about dividend investing and fundamentals, I'll also place the link in the description below for playlists that we have on how you can use dividends to help you win and how you can trade the markets with confidence. Before I end, I know I've said a lot and talked about a lot of stocks in this video, but please never ever buy a stock just because it's talked about on YouTube. It's your money, it's your responsibility. You need to have your own buy, sell, avoid, or hold signals that will cause you to buy and transact the stock as well. Never ever buy a stock just because someone talks about it on YouTube or on the internet or off any other platform, because it's your money, it's your responsibility. No one will work harder for your money than you. So you must not buy just because it's talked about, but you must do your own due diligence and you must study hard for it. Because here's the thing, lahat ng kayamanan na naglalas ng matagal, pinaghihirapan, pinag-aaralan, and it's not something that's get rich quick. So there, I hope you learned a lot from this, and this is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.